$29.87. Paid for by Term Direct.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. I'm joined today by Paul Lane to talk about our brand new guide, AI and Your Financial Plan. It's new for the month of July. And Paul, we're hearing companies all over the investment universe talking about how they're utilizing artificial intelligence in their workplace. And one of them that's been getting more and more mention is specifically in investment design and strategy. What are you hearing from major money managers when it comes to artificial intelligence?
One of the powerful things about AI is the ability to take vast amounts of data and synthesize it down into something comprehensive that's easily usable to run portfolio models out there. So utilizing price to earnings data and other financial metrics, these AI systems can collaborate with all of the data that they're provided and come out with an outcome to rebalance a portfolio and to make certain investment decisions over time.
Now, what I get worried about is companies starting to market this stuff as something that it's not. To your knowledge, is there anything out there that is actually recommending securities based on AI that has any sort of track record?
Not at this point in time. It's really important to note that this technology is in its infancy, and while it is exciting and there is a lot to be learned and further developed here, there is no proven case that there is a perfected AI model in place that's publicly available.
The brand new guide from the Armstrong Advisory Group for the month of July is called AI and Your Financial Plan. You can get your copy by calling 800-393-4001. Again, that's AI and Your Financial Plan. Get your free copy by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you here. And top story today is that yesterday afternoon, over the course of a period of several hours, the Trump administration sent out a number of letters to different countries telling them the new tariff rates that they are going to be facing on August 1st. And so, Mark, I can't help but be feeling a little bit of deja vu. It's like we hopped in our time machine and went back in time 3 months to April 2nd because, well, a couple things. First, the rates don't really differ very much from the announced rates that we saw on April 2nd to begin with. In some cases, they're the same. In some cases, they're a percentage or two higher or lower. And the only difference, I guess, is the medium. It's a letter instead of a big poster board. But markets sold off very modestly yesterday, less than a 1% drop across all three major U.S. indices. And so I think, in my opinion, markets and my own personal view at this point is, hey, like, unless proven otherwise, you kind of have to assume that this is like an opening volley and then things are going to move down from there, because that's basically what we've seen over the first 6 months of this Trump term.
Surprised at how, or maybe I shouldn't be, at how little markets are reacting today. We've gotten not much new detail over the past 24 hours, but you think that because of the level and breadth of these things, they're clearly going to have an economic impact on inflation, short-term, maybe long-term, on output, maybe long-term. You'd think stocks would have reacted with more urgency, but they don't seem to have. Would you chalk that up to markets not taking him that seriously, or the fact that there's an escape clause in these letters?
I do, and even the fact that I think it was after hours, it was around maybe 6 or 6:15. The president even said, "Look, August 1st is not a hard deadline. Like, that could even change." Yeah. And so I think that by and large, if you look at the major tariff negotiations or announcements and things like that, the trend in every single one has been, hey, we're starting from this point, and then whether it's within a period of hours in some cases, days or weeks, you see those levels, come down, and they have not stayed at the announced levels. I can't think of one area, of one country that has, actually ended up paying the original, announced levels of tariffs. The only place where you have seen that happen is on the sector-related tariffs. Those you have not seen any significant movement on. The one place where you have is in the auto sector, where they made some changes based on the imports of parts and things like that. But by and large, the trend in all of these other country-based tariff announcements has been initial number is high, and then they subsequently come down. And so, for better or for worse, I think that is what the market is conditioned for, and so you're not seeing the response on the announcement. I think ultimately it's going to be, is there implementation? And the other thing that I think we're really just transitioning towards at this point is, okay, there's a certain baseline level of tariffs that are in place at the moment. Show me how this is actually going to affect the U.S. economy, because to this point, while we have started to see some slowing, there has not been a meaningful, significant downshift that has happened in the U.S. economic data broadly at this point that you can point to tariffs as being the main cause of.
Yeah, I just don't know how you model the impact of these things given how fluid it all is. And I understand that's part of the negotiation. Negotiations usually have an aim, an objective. I still don't understand what that is. Do we want our trading partners to lower barriers to our imports? Do we want to onshore manufacturing, in which case you need to keep the tariffs in place and they need to be high? And those two objectives are in tension. You can't have both. I don't understand what the objective is on top of not knowing whether or not to take the threat seriously. And I imagine our trading partners, well, it's been reported, so I'm pretty sure our trading partners feel the same way. They don't know what we want.
So I think in looking at this, and again, there have been a number of different items that have been discussed as far as, the reasons for this. It can be, and again, I'm just going to throw these out there as things that different people from the Trump administration have mentioned. You have the idea of raising revenue. You have the idea of bringing manufacturing jobs back. You have the idea, with the original Mexico and Canada ones. Hey, we want to use this to, as a stick to get Canada and Mexico to stop fentanyl trafficking. Again, I'm just kind of going through the list of things that we've seen. The big ones that I think are apparent right now, and I want to let's look at the Vietnam announcement from last week, because the Vietnam deal came through, and it was a 20% tariff on Vietnamese imports, with a 40% tariff on transshipped goods, meaning goods that came from another country through Vietnam in order to, miss other tariffs, to try to avoid them. And so I think that this template gives us a few different insights into what is going on, because I'm a big believer, especially when it comes to like how this is all played out publicly. Don't pay attention to what people are saying, pay attention to what people are doing. And this is something that is being executed now. So the 20% tariff, the first thing that I look at there is I say, okay, there is a clear desire to raise revenue from that. I think that has to be very, very clear, because if the idea is, hey, we don't want people to be buying as much stuff from China, we want them to be buying from other places, if you really wanted it to just be, hey, buy whatever you want from Vietnam, then you wouldn't have any tariff in there. You'd have a free trade agreement where you say, no, we're not going to have any tariff barriers, and that's just what it's going to be. The 40% transshipment piece in there gets at what I think is ultimately a major goal of the Trump administration, which is, hey, we don't just want to put a tariff on China and then have a bunch of Chinese stuff shipped through other Southeast Asian countries that, they add one bolt onto it and then they send it our way and they say, oh, it's made in Vietnam or made in Thailand, and you pay a lower tariff rate. So I think that gets at a big piece there, which is the Trump administration, I suspect, is not just asking for countries to buy more U.S. stuff, but also to buy less stuff and be less helpful to the Chinese government in accomplishing Chinese economic aims. And I think that is a big piece of what is being talked about and negotiated here, and that's at least what I gather from the Vietnam agreement. The other piece that I guess I look at is, and that makes this challenging, is you kind of look at the numbers and you're like, let's say that I'm Japan right now, who just got a letter saying, hey, you're going to be paying, companies that are importing from Japan are going to be paying a 25% tariff on Japanese imports. If I look at Vietnam at 20% and I'm Japan saying, okay, my exports are going to be, taxed at a rate of, 25% to the U.S., do I even really want to play ball? Like, is that enough of a difference for me to upend my whole world and just be like, oh, I need to bend over backwards to do this and that and everything, and all I get is a measly, 5% lower rate? Like, you got to offer me more than that. I can't just be there. So part of me wonders, hey, what's the actual range of rates that the Trump administration is willing to impose, and is there enough meat there for negotiation? Because the lowest that we've seen, and the lowest you're going to get, is the 10% that the UK has. If Vietnam's at 20, what's the actual range? What incentive is there for me to negotiate if I'm not really getting that much better of a deal, I guess, is one of the questions that I do have out there. I threw a lot at you, Mark. Your thoughts?
With respect to your first point, that's a laudable, maybe, at least to me, objective, containing, if you will, China economically. Are there better ways to do it than pissing off the whole world and subjecting us all to this helter-skelter, erratic, stop-go trade policy? 6 months into it, I'm exhausted. I imagine most Americans are. So that my first question is, are there better ways to achieve that objective, if that is the objective? And by the way, if that is the objective, why not just say it?
Sure.
China's a threat to our national and economic security. We'll find common ground, deal with them when we can, when they're playing by the rules of Western civilization. Sorry, that's a chauvinist way to think about it, but it's the way things are. With respect to the second point, optimal rate of tariffs, a lot of work's been done on optimal tariffs, and not surprisingly, they depend on the objective you're trying to achieve. Given what we've seen as to how the present suite of tariffs that was rolled out were derived, that much mocked formula with a lot of arcane Greek symbols in it that just kind of cancel each other out, meaning they don't actually factor into the ratio. I don't have a lot of confidence that these tariffs were optimally arrived at based on what we've seen so far.
Let's take a quick break. I want to dig in a little bit more to how this may affect businesses as they go into the second half of the year. So let's take a quick break, and then we'll discuss that when we return.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you or a loved one needs a nursing home stay and you aren't prepared, the expense can be devastating to your savings. Understanding the Medicaid process is a key element to any successful estate plan. So call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. It'll walk you through any changes to the Medicaid rules, how to adjust to those changes, and best practices that can help educate you on how to manage expenses you might incur down the road. Don't leave your assets to chance. Let the experts at Cushing & Dolan help you protect your wealth and keep it away from the nursing home. Call right now, 866-848-5699, and get your free copy of this new guide, Last Minute Medicaid Eligibility. That's 866-848-5699. You can also request the guide online by visiting their website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up, because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and now's the perfect time to register for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston.
So, Mark, continuing on with the discussion of the new country-specific tariffs that were unveiled yesterday, 14 different countries set to have tariff rates move up from the base 10% to higher rates as of August 1st. The president also said that that is not a hard deadline and that could change. So what I'm trying to do right now is put myself in the mind of someone who runs a business where they import a bunch of stuff that you either can't or won't make in the U.S. just because it's too expensive to. I've talked at length about a buddy of mine who runs a board game company, as an example. And one of the things that he spent the last couple of months doing was saying, okay, like, I'm going to get my stuff out of China. I'm not going to make it there anymore. And he's done this at, pretty significant expense to do so, just because one of the things that he learned, not just this time, but as he was trying to even in the past move away from China, is, hey, if you have a manufacturer in Vietnam who says they can make stuff, oftentimes they just say that they're going to make it, and then they buy it from a factory in China anyways, add a couple things on, and they say they're making it. Like, it's just kind of how it works. So he spent a bunch of time over the last few months looking into new production, specifically in Vietnam, Thailand, and I think it might have been Malaysia, but maybe it was Bangladesh. I can't remember offhand. And so I haven't talked to him in the last couple of days, and I'm just wondering now, and I will chat with him at some point. He spent all this time and effort moving production out of China. And now he's sitting there saying, in 3 weeks, instead of paying a 10% tax when I import these goods, I might have to pay 25% in the case of Malaysia, 35% in the case of Bangladesh, 36% in the case of Thailand, and 20% in the case of Vietnam. And I don't know where he eventually decided to move his production to. I can't remember offhand. But imagine spending all this money to move that production, and now the tariff rates that you're paying may be 2 to 3.5 times what you thought you were paying when you started moving that production. All I know is that if I were that person, my view at this point would be, I'm not doing anything else because I've spent all this money and I might have just gotten hit with a higher tax than even what I would be paying in China. China, remember, moved up from... It's at 34% now. There was a baseline 20 on some other stuff that was before, but it didn't include this. So if you look at the rates, you're paying more if you're importing from Thailand than you are from China. Why did I just go through this whole, horse and pony show, dog and pony show, whatever pony show?
Yeah, I think the bigger lesson for me anyway, just backing up from all of the tariff, I was going to say chaos, but that's cliche, the fluid tariff situation, which nobody can get their arms fully around, is the importance of certainty in economic policy. Imagine if tax rates changed every week, your marginal income tax rate, and you had to set your withholding accordingly, and you were penalized if you under-withheld, and penalized if you over-withheld, too, because you're foregoing interest. Imagine the crazy machinations and unproductive attention you'd have to devote to deciding how much your withholding should be because they were changing marginal tax rates every week. You'd pull your hair out. What's left of it in
Thank
my
you, Mark.
case?
I
In my
appreciate
case,
that.
in my case, I wasn't talking about you.
No, mine's already gone.
You have your head shaved. Nobody can tell. So, Chuck, I always think about, because I can't relate to purchasers at companies who have to buy a lot of inputs or whatever the example is. I can't relate to that, but I can relate to somebody changing my marginal tax rate every week, changing the speed limit on my way into work. Sometimes it's 30, sometimes it's 40, sometimes it's 20. I'm just going to say, screw it. I'm just going to go 30 every day and get ticketed half the time. My guess is that's where a lot of these folks are going to end up. They're going to say, the heck with it. I need what I need. I'm going to continue to import it from vendors I know produce good stuff that I can rely on. They ship on time, etc. And I'll pass these prices along if I have to. This is an act of God at this point. That's why economists are worried about the impact on inflation.
And beyond that, beyond the inflation piece, the part that I start to get nervous about is when you talk about economic growth, one of the ways that by and large we generate economic growth is through the use of leverage. We borrow money to expand, produce more stuff, and in doing so we can achieve economies of scale and get costs down and things like that. If you're a business right now that imports a lot of stuff, do you have any confidence that the numbers that you put into your spreadsheet are going to be accurate? And does that make you just say, yeah, I'll continue to do my business, but I'm not going to grow and expand the way I was previously because I'm nervous about what the tariff rate could be in the future and how it could be different from what it is today. The thing that I worry about is that, stuff like CapEx. Do you look at it and say, okay, I'm trying to, let's say I do want to build a factory or a facility, some kind of facility here in the United States. We know that all of the stuff that goes into building, a building is not produced here. It's just not. We don't make all of that stuff here. We might have some of the raw materials and this and that, but electric meters often are not made in the United States. PVC piping not made in the United States. How much extra cost do you have to add to your projections? And at some point you just say, hey, this doesn't make sense. We're just not going to undertake the project because there's too much uncertainty or the cost is too high.
Right.
And those are the things that I wonder about. And this, by the way, is starting to show up, again, in some of the soft data now. But when you look at it, the NFIB came out with a report this morning. It's the National Federation of Independent Businesses. And one of the things we saw is that CapEx intentions for the next 12 months fell to the lowest level since 2020. So we'll see how this actually ends up playing out, but this is some of the stuff that you worry about as far as, hey, could it slow the economy while inflation bumps? Maybe. We haven't seen that yet. To this point, it's been fine, but we'll have to see what the second half shows. Quick break. We've got Wall Street Watch next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable and it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 848-5699, or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Following Monday's modest sell-off, markets today are mostly quiet. Yesterday, President Trump sent letters to several nations outlining tariff rates they would pay if trade deals were not agreed upon, and extended the tariff deadline from July 9th to August 1st. Right now, Dow is off by 72 points. S&P 500 is up only 1 point at the moment. NASDAQ is up by only 26 points. Russell 2000 up just over 0.5%. 10-year Treasury yield up 3 basis points, now at 4.42%, and crude oil is flat, trading right around $68 a barrel. Several solar stocks, including Sunrun, Enphase Energy, and First Solar, seeing losses on the day after the White House said it would enforce the halt to clean electricity tax credits faster than expected. Sunrun sinking 10%, while both Enphase Energy and First Solar are down over 3%. Meanwhile, Amazon Prime Day has officially begun, and this year will extend to 4 days instead of 2. According to eMarketer, the sale is expected to bring in a record $12.9 billion in the U.S., up from 53% last year. Amazon stock is pulling back by 1% today. Elsewhere, Meta continuing their aggressive artificial intelligence recruitment for its super intelligence division, now hiring a top AI researcher from Apple. Both Meta and Apple stocks are flat today. HSBC downgraded major banks JP Morgan Chase, Goldman Sachs, and Bank of America ahead of their second quarter earnings next week. Those stocks are down by about 2% today. And Wendy's CEO Kirk Tanner has been named the new chief executive of the Hershey Company. Tanner joined Wendy's in 2024 after more than 30 years at Pepsi. Hershey is down by 2% today. I'm Tucker Silva, and that is Wall Street Watch.
Mark, we got a piece in Bloomberg Opinion today. It's titled, "What if this time really is different for investors?" What are they talking about here when they're talking about this time being different in this piece?
Well, to me, and this is something we've talked about a lot. Firstly, buying the dip, that is, buying stocks when they've gone down, has paid off over the past roughly generation. Maybe because the Federal Reserve has become more energetic in trying to stabilize output as opposed to focusing strictly on inflation as they did in an earlier era in the 80s specifically. So buying when stocks sell off has paid off, and that buy the dip mentality, so to speak, is pretty well documented and is not something investors have felt the need to sort of deviate from. Question is, what if the regime, this is how I would phrase it, it's not how Schrager puts it, this is how I would phrase it, what if the regime has changed? We're trying to shift from services back to manufacturing. Most economists think the shift from manufacturing to services resulted in more stable and higher on average output. You can lament the loss of manufacturing jobs, but there's been an effect on volatility of output as measured by the ups and downs in GDP. The path has been smoother since the 1980s. Economists even have a name for it, the Great Moderation. What if you reverse that? Well, Great Moderation might come undone. The Fed policy making has been a little bit more predictable since the 1980s. Fed policymakers became more aware of the importance of inflation expectations. They became stricter inflation targeters, not pure inflation targeters in an academic sense, but stricter inflation targeters after the experience of the 1970s. What if that sort of unravels because the Fed becomes more politically attentive, less independent, said differently? That, too, could change the policy regime. All these things could change the relationship between stock drawdowns and the length of those drawdowns. Said differently, we might be in for a rockier ride, both for output and consequently for stocks. Not quite the way Schrager puts it, but that's how I think about it.
Yeah, I think we are at a really unique inflection point that, if I'm being honest, I don't know exactly how things are going to progress over, a 10 to 15 year period. This is not something, when I say inflection point, I'm not talking about like how the next couple months are going to go. I'm talking in terms of, bigger trends and bigger shifts that we may see. There are paths where you can easily map out, and we've talked about them quite a bit. Hey, could the next 10 to 15 years have, much higher inflation and lower growth because of, what you just talked about, less trade and more, insular policies and things like that, less overall immigration and things like that, leading to less population growth in the United States. There's a lot that you can look at and say, oh, this could be really concerning. And then on the other hand, I look at some of the stuff that is potentially happening with robotics over the next couple of years or so. And look, I very much was a skeptic on this until the last few months, and now I'm starting to kind of get a little bit of a bee under my bonnet about it. But I look at some of the things that could happen there, and I go, there's some really interesting possibilities here, but also ones that could dramatically upend industries and jobs that we previously said couldn't be. And I think that those are things that then become interesting considerations for, what does society look like by the time we get to 2040, 2045, and how different is it from today if these can in fact play out the way that they potentially could. So I have more questions than answers right now about this stuff. I don't think it's anything where I look at it and say this is definitively how this is or is not going to go. But it kind of brings you back then, okay, if you have all of this uncertainty, from a portfolio construction standpoint, what do you do with it? Not for next week, but like how do you approach that? And I think it's a real question mark as to, exactly what the best approach is going to be, other than, hey, if you don't know what to do, the best thing often is just to diversify so that you don't have all your eggs in the wrong basket by mistake. Is that wrong?
Oh, yeah. I just point out that the so-called equity risk premium, the difference, whether you're estimating it beforehand or looking backwards, the difference between the returns on risky stocks and theoretically safe haven bonds has always been positive. It's just a question of how big. I would expect that gap to continue to be positive. Again, it's a question of how big, and that is a remarkably durable phenomenon, with some notable exceptions. Stocks over long enough periods of time. We all know this. If you've ever sat through a 401k education session, you've seen the charts, the same charts we all use, about the wealth generating and accumulating power of equities relative to other things. That relationship should hold up through all the types of shifts that you described, because it's held up through past regime changes in policy. We didn't always have a Fed. Fed wasn't always independent. Government didn't always engage in active fiscal policy. That's i.e. spending more or taxing less to goose the economy, for example. That's a post-World War II or post-Great Depression phenomenon. So there have been lots of different economic and consequently market regimes over the past couple of centuries, century and a half really, for which we have good data on capital markets. But the one enduring factor is the equity risk premium, the fact that stocks have paid off if you hold them long enough. And unless the structure of the economy changes dramatically, I would expect that premium to continue to be delivered to investors. Is that something that is true throughout other major developed markets as well, or is that just a U.S.-based phenomenon? No, it is. There's a great book and paper, Triumph of the Optimists, written by a few researchers. They publish a study based on it every year. And, yeah, you make a good point. Before you declare something to be some sort of near law of finance or economics, you better make sure that it prevails across time and countries, too. And indeed, again, with some exceptions, and those exceptions can be uncomfortably long, but they're weird exceptions that arguably resulted from extreme geopolitical events or policy mistakes. So I'm pretty comfortable with saying that a portfolio of stocks should beat a portfolio of bonds over a long enough period of time. Otherwise, why would somebody hold stocks? That's a little bit circular, but that's the way the thinking goes. Let's take a quick break here. When we come back, we'll talk a little bit about interest rates and the president. Obviously, President Trump been pushing for Jay Powell and the Federal Reserve to lower interest rates. We'll talk a little bit about whether that is the right approach to actually get rates down on the things that matter to most Americans.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com. If you or a loved one needs a nursing home stay and you aren't prepared, the expense can be devastating to your savings. Understanding the Medicaid process is a key element to any successful estate plan. So call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. It'll walk you through any changes to the Medicaid rules, how to adjust to those changes, and best practices that can help educate you on how to manage expenses you might incur down the road. Don't leave your assets to chance. Let the experts at Cushing & Dolan help you protect your wealth and keep it away from the nursing home. Call right now, 866-848-5699, and get your free copy of this new guide, Last Minute Medicaid Eligibility. That's 866-848-5699. You can also request the guide online by visiting their website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Mark, one of the things that we have heard quite a bit about is the Trump administration wanting the Federal Reserve to begin lowering interest rates. In fact, Jay Powell even came out, I think it was a couple weeks ago, and said, look, if it weren't for these tariffs, we probably would be in a position where we could be lowering interest rates, but we need to, see what the effect is here. So I don't think that there's a huge disagreement from the Fed that there's some stuff out there that otherwise would be pushing the Fed to start, cutting interest rates. But a piece from Bill Dudley, who used to run the New York Fed, it's in Bloomberg Opinion, basically says, look, you need to be careful with what you're doing based on, all these different things that you're trying to move at once, because if you do too much too quickly, not just with interest rates, but some of these plans about, how you want to issue more short-term debt versus long-term and this and that, you could upset the balance of what makes the financial system work the way that it does, and that could actually end up leading to higher rates for the stuff that actually matters to Americans.
Yeah, the Fed could, in theory, either through independent judgment or as a result of political pressure or Trump putting a puppet as Fed chair, although this puppet would have to get the rest of the FOMC to go along. It's not clear that they could, at least initially. They could push short-term rates to 0 or 1, wherever the president said they should be, based on his, I'm sure, very rigorous and sophisticated analysis. That won't necessarily result in lower mortgage rates, though. They might go up if investors expect future inflation to be higher or growth to be stronger as a result of lower short-term rates. Absent an attempt to control rates at the so-called longer end of the yield curve, which the Fed can do, but that might have inflationary consequences too. You can control rates, but you won't be able to control inflation.
Right. Can we talk about this a little, because I think that there's a lot of meat here, and I think it's something that gets overlooked quite a bit. So let's do a couple thought experiments, Mark. Let's say that the Fed comes out tomorrow, and Jay Powell wakes up and says, "You know what? I'm not going to be purple tie Jay Powell. I'm going to be green tie Jay Powell because I just want to print some money." And Powell says, "You know what? I'm cutting the Fed funds rate down to 2%. I know he's not going to do this, but let's say that he does." What actually happens if he does that? Like, how does the rest of the yield curve move? And what thoughts go into why it moves the way it does?
Well, the yield curve, one theory, and when we say the yield curve, we mean the interest rate on various treasuries of different maturities. So 6-month, 1 year, 3 year, 5 year. If you put a dot at each one of those interest rates and you connect the dots, you usually get a curve. Sometimes it slopes upward. That is, longer-term rates are higher than shorter-term rates. Sometimes it slopes downward. It's inverted. Investors expect future short-term rates to come down, which they did a couple of years ago after the Fed had raised short-term rates to a very high level in terms of recent history. So you get an inverted or downward slope yield curve. So that's what we mean when we say yield curve. I give you that setup because you asked what happens to the yield curve if the short end, which the Fed can exert more or less perfect control over, if that goes down. And the answer is really in what I just said. Longer-term rates are the sum of expected shorter-term rates. I'm not going to buy a 10-year treasury and get only 4% if I expect future short-term rates to be 5 or 6%. I will just buy a short-term bond. When it matures, I will buy another short-term bond. And my average rate over that 10-year period through that strategy of rolling over stuff when it matures is going to be about 5%. That calculus forces longer-term rates up. They're a function of, again, expected short-term rates. So if the Fed decided to go pedal to the metal today to placate a politician, doesn't necessarily mean long-term rates would follow short-term rates down. That depends on expectations of future short-term rates. Said differently, you're going to have to pay the piper at some point.
Summer's here. Whoops, that was my mic. Summer's here in New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Now, Mark, let's say that the Federal Reserve does what some other central banks, generally in less stable monetary environments, have done in other scenarios, and they say, you know what, we're not just going to take the short-term Fed funds rate down. We want to go out and we want to start buying that long end of the yield curve. We want to go out and control. We want to target a 3% yield for the 10-year Treasury. What happens in that scenario?
Well, they can do it because they can print money and buy them.
And then what happens, I guess, is my question.
Maybe what happened in between when the Fed effectively financed the
World War II.
the Korean War.
Korean War, yeah.
We had a lot of inflation after World War II, not as much as other countries. We had a lot of inflation, as you know, here in the North after the Civil War. We had 100% inflation, roughly, I think, over that 4-year period. Not as much as the Confederacy. They had 4,000% inflation. They financed it entirely by printing money, which, of course, became worthless. So the short answer is, Chuck, sure, you can control the long or the short end. And I think you can control both because you can print an unlimited amount of money. What you can't control, though, is inflation. You lose control of inflation. You also lose control of output volatility. If you're targeting rates, you can't target output. It's there's no succinct way to describe it, but basically there are trade-offs, and you can't have your cake and eat it too. So I don't know exactly what would happen, Chuck. I'd love to read about it as a non-citizen of the country that tried it, but I worry that we're going to be living through it sometime in the next few years.
So I think the big thing is just because the Fed lowers interest rates that it controls, it doesn't necessarily mean that borrowing costs end up going down for individuals. Right. And by the way, we saw this last year where, remember, the Fed was cutting interest rates during the fall, and mortgage rates were actually moving up during the time. And it was because the long end is a separate animal from what the Fed controls. So just something to keep in mind when we talk about the Federal Reserve lowering interest rates, it doesn't necessarily reflect in the instruments that you, me, and the rest of the world use on a daily basis, because the Fed only controls that short overnight rate directly there. So that's something that I just, again, like to discuss because I think it sometimes gets missed in the conversation here. We're going to take a quick break, but we got a whole nother hour coming up with more Financial Exchange.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. I'm joined today by Paul Lane to talk about our brand new guide for the month of July, AI and Your Financial Plan. Paul, one of the big areas that is a pain point for a lot of folks is working on their budget. It's kind of the step one for your financial plan. And I know there's a number of tools that are starting to incorporate AI in their budgeting plans. How is this starting to work and benefit folks?
Yeah, like you mentioned, Mike, it's an area which is really difficult. You ask a lot of the clients that we meet with on a regular basis, how much do you spend on a monthly basis? Simple question, but hard to come up with that answer. What these AI tools can do is aggregate all of your total spending together, categorize different areas, and use that data to try and project what you may spend in the future. This is a critical step in the retirement planning process to get a sense for what are you spending today and can you afford to spend that much in the future. It is important to note, certainly, that there are drawbacks that come with it too.
Yeah, talk to me.
This is a technology that's in its early stages, and it's only as good as the data that's fed to it. There can be some issues sometimes with properly categorizing certain types of expenses over time, and as such, you have to be very careful when you're using this type of technology and perhaps vet it against your own assumptions through that old school spreadsheet fashion as well.
It's always a good idea, but especially when we're talking about brand new emerging technologies. Folks, the brand new guide from the Armstrong Advisory Group is all about AI and how it could affect your financial planning strategy. If you would like to get your free copy, call the Armstrong Advisory Group at 800-393-4001. The guide again is AI and Your Financial Plan. It's available at 800 393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you here, and markets fairly quiet today, actually very quiet today, not much movement at all. The Dow is off 90 points right now, less than 0.25%. The S&P 500 is up 1 point, not 1%, but 1 point. The NASDAQ is up 24 points, about 0.1%. So major U.S. stock indices not moving a ton. Yesterday we had a very modest down day. Stocks down anywhere from about 0.75% to 1%, depending on the index you were looking at. This after the Trump administration sent out letters to 14 different countries: Japan, Korea, South Africa, Kazakhstan, Laos, Malaysia, Myanmar, Tunisia, Bosnia, Indonesia, Bangladesh, Serbia, Cambodia, and Thailand, indicating that they would begin paying tariff rates of between 25 and 40% as of August 1st. Just a few minutes ago, the president sent out a post on Truth Social that I will now quote for you. As per letters sent to various countries yesterday, in addition to letters that will be sent today, tomorrow, and for the next short period of time, so Mark, it does sound like more are coming, tariffs will start being paid on August 1st, 2025. There has been no change to this date, and there will be no change. In other words, all money will be due and payable starting August 1st, 2025. No extensions will be granted. Thank you for your attention to this matter. Yesterday afternoon around 6 p.m., the president had said in a spoken interview that that date was, potentially movable and not final. But it does sound like this is a more final thing here. But market's not really moving on this, and this gets at two things, which are, A, to this point, even with, previous tariff announcements, they have oftentimes represented the peak of the tariff rate, and then they have subsequently come down or been walked back. The second piece is that even with the tariffs that have been put in place to this point, the economic data has not shifted a ton yet. And so I think markets are also kind of taking a wait-and-see approach where they're starting to focus more on the economic data and on earnings as opposed to reacting so heavily to each announcement, just because, quite honestly, reacting to each announcement has not really been a worthwhile strategy for this year by and large.
No, I think that's the logical explanation of markets' reaction. They're not taking these threats seriously because every threat that has been made since Liberation Day and before has been walked back. So the economic damage could be limited. It engenders, it inserts uncertainty into agents' thinking. You talked in the last hour eloquently about someone who's been forced to rethink processes, right? And effectively everything's up in the air. I try to liken it to, because I can't relate to purchasing managers being vexed by this, I tried to relate it to the government changing the marginal tax rate every month and then dinging you if you didn't withhold enough, or to your locality changing the speed limit once a week. You wouldn't know how fast to drive. Or in the previous analogy, how much to have withheld from your paycheck. At some point, either people are going to get out of the business that they're in because they can't profitably run it if everything's changing all the time, or they're just going to ignore it and accept increased earnings volatility. And this is, I think, the key point for equity markets. Earnings will be more volatile. That should translate into more volatile stock prices. More volatile stock prices have a lower average. By that I mean change day over day or month over month. So it's probably not good for capital markets, Chuck, and the returns investors are expecting to meet whatever their goals happen to be.
In addition to what we're seeing in equity markets today, bonds continuing their recent sell-off from the last week or so. 10-year Treasury back up above 4.4% today to 4.419, up 2.4 basis points. Oil hanging out in the high 60s still, up 14 cents a barrel on West Texas Intermediate to 68.07. The AAA national average for gas prices also moving up 0.6 cents to 3.14 and 9/10. So kind of back into that 3.10 to 3.20 range after the brief period above it following the conflict between Israel and Iran. And then we've got gold today down 37.70 an ounce to 33.05 and 10 cents. And so gold, another one that's just kind of been hanging out. Like if you look at where gold prices have been, it feels an awful lot like what we've been seeing from oil, where it's just kind of coiling up here right now. And there's going to be a move at some point. Which direction, I don't know. But gold's basically been sitting between 3,200 and 3,400 for the last 2 months now, just kind of in a pretty narrow, like 5 to 6% trading range. And you get the sense there's another move coming in the second half of the year, because gold doesn't usually just sit still for very long. It tends to, move oftentimes fairly explosively in one direction or another. But it's been pretty calm for the last couple weeks after running up significantly in the first few months of the year. Want to talk about this piece from CNBC. It's titled, "The Big Beautiful Bill May Help Some Seniors on Social Security, but it does not eliminate taxes on benefits." And basically, the big thing is that because of the way that rules are in place around how reconciliation bills are allowed to be passed, one of which is pretty much don't touch Social Security. You're not allowed to touch Social Security through a reconciliation bill. The bill that passed last week cannot actually just go and say, hey, we're removing all taxes on Social Security benefits. So instead, the workaround is that there is an additional deduction for senior citizens of up to $6,000 for people aged 65 and over. So this is also where things start to get a little more complicated, because it's not just a straight $6,000 benefit. Taxpayers with up to $75,000 in modified adjusted gross income or $150,000 if filing jointly receive the full deduction, but then above that it starts to phase out. And so there is a window in there where it can effectively, you could say it's reducing your Social Security tax to zero. It's really just reducing more income tax payments down, whether it's from Social Security or from other earned income. It doesn't really matter. You don't have to have Social Security income in order to claim this. But it's something where basically the estimates, and this is according to the Urban's Brookings Tax Policy Center, says the people that are going to benefit from this, they generally have between $50,000 and $200,000 in annual income. Below that, you're typically not paying tax on Social Security anyways, and above that, you would be hit by the phase-outs. Your thoughts, Mark?
My thoughts on all of these handouts to placate specific interest groups, and I don't mean to diminish seniors as an interest group. If I were collecting Social Security, and someday, hopefully, I'll get there, I would want to pay fewer taxes on it too. I get that. I just wouldn't expect much in terms of a macroeconomic bang. By that, I mean an increase to consumption, certainly not an increase in the trend rate of growth, as some of the proponents of these changes are claiming. For most of my life, and I'm in my early 50s, so for most of my life, the tax code was made simpler starting in 1986. Flatter, simpler, close the loopholes, make it easier for people to comply, reduce the gimmicks and handouts. They just convolute things and make more work for accountants. No disrespect to accountants.
You can disrespect the accountants.
But what they do, okay, Chuck, thank you. What they do is what an economist would call rent seeking. They're not adding to the pie. They're not growing it. And a lot of us rent seek. And that's two words, rent seeking. Now, I don't mean rent as in the rent you pay, although it's derived from the way that term used to be used. I mean, it encourages people to lobby or take action or position themselves to get a bigger slice of a static or even shrinking pie, rather than undertake activity that grows the pie. My whole life, politicians really in both parties talked about ways to grow the pie.
Sure.
It's sad to me that we've abandoned that growth mentality. And both parties have abandoned it. They want to close us off to the world. It's just a question of how to implement tariffs and how high they'll be. I think we'd be in the same tariff situation, maybe with a little less drama if we had a Democrat president. I don't think it matters who's running things, Chuck. We've shifted from a growth to a bunker mentality. That to me is sad. It means slower growth. And by that I mean, in the last century, growth grew at about 3%. In this century, I'm talking real GDP, not per head, but just GDP, and
Sure.
real means after inflation. This century, growth has grown 2%. For a lot of different reasons. But if you don't think that matters, let this soak in. We'd be 40% richer had we grown at the pace of the last century. It's nobody's fault. It's just the way certain things have fallen out. Productivity slowed, been hit by a couple of big recessions. But the compounding power of economic growth, even small differences, is dramatic over longer periods of time. So we'll be a little bit poorer than we otherwise would have been in the long run as a result of all these distortions, trade and tax distortions that we're imposing on the economy.
Yeah, the piece that is interesting here is you look at the 2017 Tax Cuts and Jobs Act, and the big thing that did was it simplified and streamlined the tax code for a ton of filers.
That's right.
It was a huge simplification of the tax code. Right. The interesting thing is that this bill, again, I'm not passing like a judgment on whether the overall thing is good, bad, or ugly, but this bill is a significant complication of the tax code.
Yes.
I mean, the things that are going in, so you get this $6,000 extra deduction if you are over age 65, but that's only available for 4 years, 2025 through 28. Will they extend it? Probably, because generally that's how things go. The SALT deduction goes up. That's not really a complication. It's just a changing of it. So I guess that's not a thing. Here's another one that I thought was just interesting. Is basically, again, something that is going to result in CPAs having to do more work.
Mm-hmm.
It limits the value of itemized deductions to 35 cents on the dollar for taxpayers in the top bracket. So the top tax bracket's 37%. But if you are itemizing deductions, your itemizing only gets you a 35% deduction, not 37%.
Okay.
So, it's basically you're getting like a 93% itemization.
Chuck, can I pass judgment on it? I know you're more reserved than I am.
Sure.
It's stupid. We shouldn't be doing it. We should be, as you said, simplifying the code, or maybe as I said, and I'm putting it in your mouth. But simplifying the code, reducing costs of compliance. That's how you change the trend in economic growth.
Other things in here, and again, it just opens up opportunities for abuse. $25,000 in tip income is deductible for individuals in traditionally and customarily tipped industries. But the deduction then phases out at a 10% rate when AGI exceeds $150,000.
Oh. Well, that clears it up.
Temporarily making auto loan interest deductible for vehicles with final assembly in the U.S. for tax years 25 through 28. So we're going to have people policing whether the car was made enough in the U.S. now to qualify for the deduction. Yeah. This is the stuff that, technically it creates work, but is it useful work?
It's not trend-changing work. It's rent-seeking. It doesn't induce generative behavior. It induces people to position to benefit from policy.
Because the one I always like to go back to is, in theory, look, you could have everyone employed if you paid people to dig holes. If half the people could dig holes all day and half the people filled them in. Does it produce anything useful? Not really. And I'm not saying that there's not something that's potentially useful here. And to a certain extent, I even the auto loan thing was kind of interesting to me on one level because, Mark, were you a fan of the Cash for Clunkers plan?
Hated it.
Hated it. So
can we talk about that on the other side? Because I don't want to just leave it at that and without an explanation. But there's a bigger issue there. But
okay, let's take a quick break. When we come back, we've got Tucker. We've got trivia, right?
Yeah.
Okay, let's do some trivia, and then we're talking about loans for clunkers after this.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Artificial intelligence continues to evolve and can now play a role in financial planning. Hi, this is Mike Armstrong from the Armstrong Advisory Group. There's a lot that's still unknown about the benefits of utilizing artificial intelligence, but understanding it may help you make smarter decisions about how to manage your retirement plan. We have a new guide called AI and Your Financial Plan. In it, we'll take a look at what AI does, how it works, and what risks are associated with using it. The guide is designed to provide you with a clearer picture of the tools available as you evaluate your overall strategy. If you'd like to learn more about how AI can have an effect on your financial planning, call us today at 800-393-4001. That number's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you or a loved one needs a nursing home stay and you aren't prepared, the expense can be devastating to your savings. Understanding the Medicaid process is a key element to any successful estate plan. So call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. It'll walk you through any changes to the Medicaid rules, how to adjust to those changes, and best practices that can help educate you on how to manage expenses you might incur down the road. Don't leave your assets to chance. Let the experts at Cushing & Dolan help you protect your wealth and keep it away from the nursing home. Call right now, 866-848-5699, and get your free copy of this new guide, Last Minute Medicaid Eligibility. That's 866-848-5699. You can also request the guide online by visiting their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange. And yesterday it was announced that Conagra Brands sold Chef Boyardee to hometown food company for $600 million. Chef Boyardee was created by chef and restaurant owner Hector Boyardee at his restaurant in 1928. So, trivia question today. What city was Chef Boyardee founded in? Once again, what city was Chef Boyardee founded in? Be the fifth person today to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Mark, last segment we were talking about the provision in the new tax bill that makes auto loan interest deductible if you're itemizing up to $10,000 a year on vehicles made in the United States. And I mentioned just offhand, like, did you like cash for clunkers? And you said no. And I want to dig in on that for a second because I want to get to, again, just like thoughts on like, when we talk about policy making,
yes, go ahead.
You and I talked back when the Inflation Reduction Act passed, and we had many conversations on the show where we said, look, ultimately, if you want to build electric vehicles, that's fine. Do we want the government subsidizing $7,500 per vehicle? Is this a need given the limited fiscal resources that we have? And we ultimately said no, just because of a multitude of different reasons. There could be better technologies that maybe we're preempting. There could be other things we could spend that money on. Lots of different reasons. We said, no, we don't like that EV credit there because it didn't make sense in the context of the overall economic approach. Cash for clunkers. Talk to me about why you didn't like that
I'm
piece.
sorry, it's not worth getting off on too much of a tangent about because you brought up a more interesting question. But we destroyed a lot of wealth. What was it, 1 million cars or something that we just took off the streets? That pushed up the price of used cars was one of the arguments at the time, and there was some evidence for that. It was not it was a second or third best way to the point you just made of actually helping the environment. And I'll segue. I don't want to get sidetracked on policy from 20 years ago, which you'll never
it's fine.
Never be
it's
tried
great.
again. But
let's do that.
It does relate to the to recent Green New Deal type policies, which are also second best. From an economist, I think, point of view, they'd say just tax carbon. If you make gas more expensive, people will substitute away, choosing other technologies based on their own preferences. Don't put all your eggs in the EV basket. Look at what's happening to the EV basket. It's now all frayed,
right,
and is arguably not where you want to be if you invested a lot of money in a charger or something, or had plans to. Those plans, hopes for that have been dashed. So if the political climate could change and it effectively nullifies all the investments that were made over the past few years, that was money wasted. So there are first best. The larger point here, I don't want to get bogged down in the specifics. There's a larger point, which is there are first and second best solutions to problems typically, and you always have to ask, is this the best, most efficient, or least cost in exchange for your in a bang for your buck sense way to achieve whatever it is you're trying to achieve?
The other piece is, okay, let's say that you've got this thing in place now where you can deduct, some interest on your car loan if you buy an American-made car now. Mark, does that make it cheaper to build a car in the U.S.?
Does increasing the demand for American-made cars?
Yes.
And I sound like that's sarcasm, but I'm thinking out loud here. No, I think all else equal, if you're increasing the demand for something without taking measures to expand the supply of it, the price should go up. And your point is it may make cars on the margin less, not more affordable.
Yeah, I kind of have. I'm seeing signs of the American healthcare and education systems now in the auto industry. I'm like, oh, we're going to do that. Not quite. It's different based on how they work, and there's obviously big differences in the specifics of the industries. But I don't love the idea that, hey, let's just throw money at it and it'll make it more affordable. No, that's not usually how it actually works. Quick break here. Trivia Answer and Wall Street Watcher next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? but you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, is the healthy spouse allowed to keep anything when the sick spouse enters a nursing home? And what happens if the sick spouse has the majority of the income?
Great question, because when you're talking about applying for Medicaid last minute, or when someone enters a nursing home and you want to do this last minute, they're going to look at both assets and income, right? So from an asset standpoint, as a married couple, they do allow you to keep approximately $148,000. That piece is indexed for inflation or changes every year. The sick spouse is allowed to keep $2,000. So you're around $150,000 of total assets that you can keep. By the way, if you're single, you only get to keep $2,000 in assets. From an income perspective, the good news is that the healthy spouse can keep all of the healthy spouse's income, Social Security, pension, you name it. And so it does not matter how much income the healthy spouse has, but they are entitled to at least a minimum monthly maintenance needs allowance, but no maximum.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, following Monday's modest sell-off, markets today are now in slightly negative territory. Yesterday, President Trump sent letters to several nations outlining tariff rates they would pay if trade deals were not agreed upon and extended the deadline from July 9th to August 1st. This morning, President Trump posted that no extensions will be given to that August 1st deadline. Right now, Dow is off by 0.3% or 141 points. S&P 500 is dipping by 4 points, now 5 points. And the NASDAQ is off by only 2 points. Russell 2000 is up 0.8%. 10-year Treasury yield up 2 basis points at 4.41%. And crude oil is up about 1/3% higher today, trading just above $68 a barrel. Several solar stocks, including Sunrun, Enphase Energy, and First Solar, seeing losses after the White House said it would enforce the halt to clean electricity tax credits faster than expected. Sunrun down by 11%, while both Enphase Energy and First Solar are seeing losses of 3%. Meanwhile, Amazon Prime Day has officially begun, and this year will extend to 4 days instead of 2. However, according to Momentum Commerce, which manages 50 brands in a variety of product categories, said Prime sales fell almost 14% in the first 4 hours of the event compared with the start of last year's sale. Amazon shares are now down nearly 2%. Elsewhere, Meta is continuing their aggressive AI recruitment for its super intelligence division, now hiring a top AI researcher from Apple. Both Meta and Apple stocks are flat today. HSBC downgraded major banks JP Morgan Chase, Goldman Sachs, and Bank of America ahead of their second quarter earnings next week. Those stocks are down by about 2%. And Boeing delivered 60 airplanes in June, the most since December of 2023. Boeing stock is down by 1%. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked the trivia question, what city was Chef Boyardee founded in? That would be Cleveland, Ohio. Eric from Derry, New Hampshire is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Eric. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mark, I want to talk about a couple pieces with regards to artificial intelligence. One from the New York Times. Which workers will AI hurt most, the young or the experienced? And one from the Wall Street Journal, CEOs start saying the quiet part out loud, AI will wipe out jobs. And let's tackle the New York Times one first in terms of which workers will AI hurt the most. Young or experienced, I think, is the wrong way to look at this. Because it's basically saying, like, okay, is this, something where we're going to get rid of the cheap workers or the ones with, lots of institutional knowledge? And I think ultimately it's going to be different in different industries depending on where the real value lies. I know that's kind of a cop-out, but it's just how it usually is. It's not usually one or the other. It's usually one and the other. Your thoughts?
I'll make a really bold prediction here.
Yeah.
This new technology will reduce employment in some industries while increasing employment, resulting in more in other industries, resulting in more jobs overall. Why do I say that? Because that's been the result every time a new technology has been introduced, from steam to petroleum to electricity and all the little follow-on technologies that resulted from those. And you could pick your favorite example. The light bulb put candle makers out of business eventually, etc., but created far more jobs at utility companies, etc. So, Chuck, yeah, some people will be displaced. Maybe I'll be displaced by AI. I have my doubts there after seeing it perform in some areas that I have an interest in, but eventually, maybe. Sorry, that was the end of my thought.
I thought there was going to be something after the maybe.
Because normally you don't end a sentence with maybe.
It's
maybe I am more replaceable than I thought.
And this was our first demonstration of Marc Fandetti AI on air, live.
Long way to go.
So here's the thing that I always come back to on this is ultimately, to a certain extent, we want jobs to be displaced by new technology.
That's right.
Because it means that we're getting more efficient and actually seeing gains in our real standard of living. As an example, when we moved from having to carve every book into stone tablets to the printing press, I know there were some technologies in between, obviously, but we didn't say, oh, those poor stone tablet makers, here, let's keep giving them jobs because we need to keep them employed. No, ultimately it was, hey, we can make way more books way more cheaply by using this technology. To anyone in the construction industry, would you do your job without power tools? Probably not. But that effectively is something where we were able to do two things. Number one, in the short term, probably didn't need as many people working in construction. But number two, the ones who were still there could build way more stuff way more cheaply because it was much faster to do so. No one sits there and says, gee, you know what? I would prefer to just use, a nice little handsaw to do everything as opposed to anything, using electricity. No, give me the electricity. Let me build faster. So when it comes to AI displacing Mark, me, Tucker, or anyone else, because I do think that the intersection of AI and robotics is now a place where in the next few years, for the first time ever, I'm starting to feel that tradespeople are not entirely safe.
That may be true, but they'll be repositioned, and that sounds like a horrible, cold, and clinical way to describe somebody perhaps losing their livelihood. There will be some of that, but to your point, that happens every day. Technology...
Mark, ultimately, we should all hope that all of our jobs are replaced.
No, you're right. That is the... Go ahead, sorry.
Because this gets to the question of, look, if one person can wake up each morning and press one button and the whole world runs itself, don't we actually have more freedom to actually do what we want, even if what we're doing is still working but just on different things or for our own enjoyment as opposed to whatever else? Yes, you want that easier life. No one actually sits there and is like, make my life harder. You don't want that. Do we have things societally that we're going to have to reckon with as we navigate what this could look like? Absolutely. Do I have any evidence that we can do that successfully? Not really. That might be the hard part, is navigating each other more than navigating the robots and stuff like that. But this is something based on what I'm starting to see out there that I now think is a 3 to 5 year thing, not a 15 to 20 year thing. So there's something coming here, and I don't think it's going to be the generative AI stuff that's actually the meatiest piece of this. Generative AI writing haikus and giving, pictures of cats riding dinosaurs, I don't think that's where the meat is on this. I think, quite honestly, robotics is going to be something that is hugely transformative in the next decade, and I, for one, welcome our new robot overlords. I just want them to know that, publicly, a few times. Anyways, this is all something that is really interesting over the next 5 to 10 years, but if you're thinking about AI right now and, hey, how does this work with, my financial plan, the good news is that the Armstrong Advisory Group has a guide this month on this exact topic. It's titled AI and Your Financial Plan, and specifically talking about the AI tools that are out there right now, budgeting ones, investment strategies, just understanding how AI can fit into, the world of finance and how it may or may not affect your personal portfolio and your financial plan. The guide is titled AI in Your Financial Plan, and it's available by calling 800-393-4001. A lot of meat in here, a lot of things that you can think about as far as, hey, are there places where AI can help? And maybe what are some of the risks of using AI with my financial plan? Because it's not always perfect. Again, the guide is titled AI in Your Financial Plan, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
I want to talk a little bit about Prime Week from Amazon, which used to be Prime Day, and it's now Prime Week. It's running today through through Friday of this week, so it literally is almost the whole week. And I got this piece here from the Wall Street Journal. I'll quote from it. The sale, which kicks off Tuesday, is expected to bring in a record $12.9 billion in the U.S., up 53% from last year, according to research firm eMarketer. So it's, longer, and then they also have all these other sales and this and that they're doing now. But here's the thing that we have, at least early on, and again, I know that it is early on at this point, so we'll have to see where this goes. But according to early data right now, Prime Day sales are apparently down 14% so far to start the day. Discuss.
I chalk that up to just people realizing it's 4 days and they're not rushing. I think it's as simple as that. Because I'm not. Like, I'm going to be keeping an eye out for stuff, but I know it's now 4 days instead of 2, so I'm not, like, sprinting to get it done.
Uh-huh.
I think it's as simple as that. Maybe I'm wrong. I don't know.
Tucker, I know you've tended to focus on Prime Day more than I have. What kinds of things are you looking for, and where do you see deals out there that you might be interested in? What are the things where you're seeing them? Yeah.
I mean, in the past, I have purchased a Shark vacuum, which is a tremendous vacuum.
They're fantastic. They're fantastic.
But I saved like $50. I mean, I always have my eye out on anything kitchen related. Love to cook and everything like that. I'm seeing if there might be an air compressor available because I discovered I needed one over the weekend when I was trying to blow up this sprinkler thing for the kids, and we had like a car thing. Car was in the backyard. It was a whole thing. So I am in the market for an air compressor.
I'm picturing you just trying to blow it up.
We literally had to put the car in the backyard to do this because we only had the one that hooked up to the car, not one to an outlet. So it was a whole ordeal.
They do make converters,
We didn't have one.
Amazon sells them.
That's why Prime Day is here.
Yeah.
So I have not seen anything, but I mean, Wirecutter's a fantastic source for looking at the best possible deals out there.
I've said this before, but looking at I'm just on Amazon looking at vacuum prices right now. I don't understand how vacuum repair people stay in business because it's literally cheaper to buy a new vacuum today than to ship your old one off to fix it.
Well, I mean, if you look at the show Breaking Bad, you can understand why.
Well, yes, but there's only so many of those services that can exist in any one location.
Yeah.
In any case, let's take a quick break. When we come back, we'll do a little bit of Stack Roulette.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. If you or a loved one needs a nursing home stay and you aren't prepared, the expense can be devastating to your savings. Understanding the Medicaid process is a key element to any successful estate plan. So call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. It'll walk you through any changes to the Medicaid rules, how to adjust to those changes, and best practices that can help educate you on how to manage expenses you might incur down the road. Don't leave your assets to chance. Let the experts at Cushing & Dolan help you protect your wealth and keep it away from the nursing home. Call right now, 866-848-5699, and get your free copy of this new guide, Last Minute Medicaid Eligibility. That's 866-848-5699. You can also request the guide online by visiting their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix. Lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Artificial intelligence continues to evolve and can now play a role in financial planning. Hi, this is Mike Armstrong from the Armstrong Advisory Group. There's a lot that's still unknown about the benefits of utilizing artificial intelligence, but understanding it may help you make smarter decisions about how to manage your retirement plan. We have a new guide called AI and Your Financial Plan. In it, we'll take a look at what AI does, how it works, and what risks are associated with using it. The guide is designed to provide you with a clearer picture of the tools available as you evaluate your overall strategy. If you'd like to learn more about how AI can have an effect on your financial planning, call us today at 800-393-4001. That number's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange brought to you in part by the U.S. Virgin Islands Department of Tourism. 3 stunning islands, St. Croix, St. Thomas, and St. John, all just a quick flight away. No passport required, just sunshine, soft sand, and that warm island vibe. Craving a break? Plan your fall escape now and experience the beauty of America's Caribbean paradise, the U.S. Virgin Islands. Book today at visitusvi.com. That's visitusvi.com.
Mark, what do you got for me for Stack Roulette?
Chuck, I know how much you love private credit as an asset class, as an investment. Am I right? It's like your favorite.
I see what you did there.
I thought I'd give you something to maybe grind your gears.
Oh, good.
There's an article in the Financial Times, it was not among today's top stories, about innovations in the vehicles that allow... Vehicle is like an ETF or a mutual fund. It's just a wrapper that allow investors, it could be a high net worth investor, it could be an everyday schmuck like me, that allow you to buy things like private assets, non-publicly traded equity, ownership that is, and credit, loans that is, that historically have only been available to sophisticated pension funds. And I guess the caveat here, this is a much broader and more interesting topic, which is going to scratch the surface. The caveat here is whenever an investment manager says, we're trying to democratize something, I think our house view on the phrase, we're going to democratize this or that, Chuck, is sort of run for the hills because they're actually trying to fleece you.
Yes,
and
we're trying to unload this on you.
Unload, that's the verb I was going to use. They're trying to unload something on you they couldn't unload on something more sophisticated. Nothing inherently wrong, right, Chuck, with private equity? Some great companies that are owned privately, Dollar General, Staples, Petco, and others. So nothing inherently wrong with it. Or private credit, which is just the flip side of that. They make loans generally to private equity companies that in turn infuse it into some of the companies and others, some of those that I mentioned and others. So nothing inherently wrong with it, but usually for very sophisticated investors, not at all convinced this is something that should make an appearance, for example, in 401k plans, but something I suspect we'll be talking a lot more about.
Yeah, it's something where my dislike for just the term private credit, even before we get to what it actually is, stems from the fact that, A, it doesn't really mean anything. I mean, private credit can be anything from, like, hey, I'm lending a company $10 million so it can run its operations, to I lent someone money based on the value of their art collection. Like those are both technically private credit, and you will see both of those in different private credit vehicles. So just being like, oh, I got some of my money in private credit is no different from being like, well, I've got some of my money in stocks. Well, what is it? Is it Campbell Soup or is it NVIDIA? Because those are kind of different things.
That's true.
So that bothers me a little bit to begin with. This is before we even get to that whole idea of democratization, which any time that I hear that, again, I think, okay, what are you trying to unload on someone? Because, hey, private credit companies, private equity companies, they've made a lot of money working with, high net worth people, very small numbers of them for a long period of time. Why are they all of a sudden trying to work with the person with $500? It's not out of the kindness of their heart. It's not because they're like, well, we want to give you the great returns. Well, no, there's only so many great returns to go around. Not everyone can get the same payout. It doesn't work like that. There's a distribution of companies that are good at it, companies that are bad at it. And if you're the small guy, where do you typically end up? Not usually with like the best ones, because someone else can pay more for that kind of quality. It's no different from any other product, quite honestly. So whenever I hear the word democratize, immediately I start going, okay, like what bags are they trying to unload?
Yeah, absolutely. Your antenna should go up. Very different than public markets. We can all participate in those.
The other one
very different.
The other thing to be careful of, though, and this is something that you're starting to see more of as well, because I think there were a couple ETF approvals on this, is publicly available securities that hold private ones. So think an ETF that holds, private credit instruments. And the problem here is not the liquidity of the public market instrument, but the underlying. So if what do you actually own and when can you actually sell it? These are things that you need to be aware of, because yes, you might be able to sell the ETF, but depending on the liquidity of the underlying, what kind of pricing do you actually get if you're, trying to liquidate? You don't know until these things go through different stressful situations in markets. It can get really complicated. So all I would say on any of this, be really, 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 really careful when you start talking about private instruments. It's not a never touch them, but it's a know what you're doing and why you're doing it. Markets remain mostly flat thus far. We are done for the day, but the good news, we'll be back on tomorrow, and hopefully our show will be a little bit better.